Wow, there you go. Danny, shut up.
And I heard the clap.
Very soft clap.
It was.
Yeah, I was weak.
Right. Welcome back,
Have
guys.
that, deal with that, edit that. Sorry.
Clap again.
No.
Right. Welcome back, guys. This is Britcoiners episode 178. We're joined this week with Freddie. You say
Hello.
hey. And I'm off camera this week, so just my voice. Agenda this week, we have got Bitcoin price, Bitcoin realized losses, GameStop, gold, Bitcoin ETFs, Lightning $1 million, COF, and some B HODL questions. So should we start with B HODL questions first?
Great stuff. Do we not traditionally start with the price?
We do.
Yeah, let's
Oh.
start with the price.
Can do, go on then.
$5,904.
What was it last episode? Jeez. Do we have? What was it? It must have been.
Oh,
I'm gonna guess it was at 89 odd.
No,
Close. Right, nice one. And on the last pod, we were saying that the price had dropped since we were doing pods.
Yeah.
So we were back to save the price,
which
and
we did.
subsequently we've dropped.
It did go up to 97.
Did it?
Then went back down because we've not done a pod in a few weeks.
Right,
So
okay.
that's maybe the point, Dave.
Just apologies.
So we're back again to.
Is the
Yeah.
podcast the only thing sustaining interest in the Bitcoin price?
I think it might be.
Heck of a drop. What's caused that, Danny?
Where do we begin?
Dropped $10,000 just yesterday in a day.
Should we come back to the price because there's a lot of moving parts to all that in a minute. And go back to the B HODL first, and let's deal with B HODL.
That's literally what I was trying to do, and then you guys said, let's do the price.
All right.
Good idea, Dave.
Thanks.
Okay. So we asked the community for some B HODL questions because we had Freddie joining us today. So we've got a couple of questions here from the Telegram group and Twitter. First question, ask Freddie if he's excited about visiting Suffolk.
I'm terribly sorry, I didn't quite hear that question.
Ask Freddie if he's excited about visiting Suffolk. So that is for the conference, I think, in May.
Are these
The evening
again?
one.
I'm slightly deaf, Molly.
Can you not? Oh, I'm going to have to shout. Should I sit
You
back?
really are. Start shouting, Molly.
Conference in Suffolk in May.
Ah,
You're going to
Yes.
evening.
yes, exactly right.
Yes. Are you excited?
How can I not be excited? I think I'm going to be on stage with Raz, who is a friend from the Bitcoin East group.
Yeah.
He's very much a store of value maxi, not a payment maxi. I kind of straddle those two buckets, so it's going to be interesting to chat with him on stage. And without wanting to preempt a lot of the stuff that I think we'll be talking about, for me, Bitcoin is still on its transition to becoming a fully widely accepted money, and both of those elements are inevitable parts of that transition journey. It can't stay a store of value forever, and if it's only a medium of exchange and has no value, then it's arguably useless as a money. So for me, both of those elements are important, but yeah, it'll be fun to butt heads with him on stage on that.
Is it a conference you've done before, Freddie?
No, it's not actually. So sadly, I wasn't able to make it last year.
Oh, okay.
But some of the same guys who were at the conference where you guys went up to Derby, so I think some of the same guys will
okay.
be there as well.
Oh, wonderful.
Yeah. You want to go,
Should be
Dave?
a good do then.
Me and you.
Yeah. Do you want
bros.
to go? Should we go?
Sure.
Like,
When is it? When is that?
committed
Do we
now.
know? Have we got the dates?
Yeah, it's actually, I think it's May 22nd. I think it's Bitcoin Pizza Day
No,
then.
we can't go
May
then anyway.
22nd. So if you're free May 22nd, go to Suffolk and see Freddie.
Cool.
TT for you guys.
Oh, it's hell
Yeah.
on the island then.
Yeah.
Yeah, right.
Stuck here.
Okay, cool. Next question. Will B HODL be running a wrap or other raise or issue a convertible note regularly to get the flywheel running?
I guess we can't technically answer that.
We can talk about what's in public domain that we've announced to the market.
Yep.
So in very generic terms, we can probably confirm that we will be running the same kind of playbook as a lot of treasury companies do. We obviously have a shareholder meeting today, which is public and has been announced to the market. We'll be looking for shareholder approval for a buyback program. Buyback programs traditionally work in conjunction with an ATM program, and they let you actively manage your capital stack effectively to ensure that you continually increase Bitcoin per share over time. So I don't know whether we can go into a huge amount more detail than that at the moment, can we?
I think that's enough in terms of everything's on the table.
Okie dokie. I'd like to understand more about the thesis behind the CoinCorner loans to buy additional Bitcoin and how the financial mechanics of that work. I.e., if there are monthly repayments for the loan, then does the pounds come from selling Bitcoin earned from the Lightning activities?
It does not at the minute, but there's potential that yes, it would do in the future. And if that can obviously balance itself out and the Lightning revenue can effectively cover the cost of the interest payments every month, then you've kind of got a never-ending access, I guess, in some respect, to continue to buy more Bitcoin via the Bitcoin-backed loans. Bitcoin-backed loans date back, obviously, to many years back now, sort of 2018 times, and Michael Saylor then was the first one for a treasury company to really start making use of them in 2020. And he did it at a slightly larger scale than we've done. I think it was it with Silvergate for $100 million for the first one. And that was kind of his first dipping his toes into debt instruments for how he could accumulate more Bitcoin based off their current collateral and their holdings. Obviously, he's then evolved into more now into what we're seeing with the SDRC, with the preferreds. I'm just getting corrected on my facts. Was it $200 million? $205 million. With SDRC now, with preferreds, so they're obviously starting to move more into other options and other debt-based facilities to accumulate more Bitcoin. So this is kind of our, as we're touching on, as Freddie's touched on, Dave's touched on there, with the ATM and the buybacks, all of these are foundational pieces to what would be a treasury company, a Bitcoin treasury company as a whole. So it's just part of the process at the minute. It's dipping our toes in, testing things out, making sure we're happy, walking before we can run, and just making sure that we are sensible with the approach for the longer term there. That covers. Anything to add, Dave?
No, I think it's a very decent tool in terms of when the market moves like today, there might be opportunities to buy. You want to move quickly, and that the loan conditions allow us to move quickly and not be tied down by anything liquidity-wise. So it lets us move quickly, and it's a good tool. But it's one of many tools.
Cool, excellent. Does B HODL have any specific milestones in terms of Bitcoin accumulation? So they said they remember when SWC launched, they had very clearly stated that 1,000 Bitcoin in 6 months and 2,112 months gave clear direction of what they wanted to achieve.
Yeah, I guess we were technically advised as well not to really give projections of things out there as a public company, because obviously it can be used against you. I think they obviously they give out their projections. They hit some of their projections, I think, or I say projections, their targets of what they were trying to achieve. That was obviously due to, it was a very, very bullish 3 or 4 months for Bitcoin treasury companies, and that's how they were able to successfully hit those targets. Right now, in the bearish sort of term here that we're in at the minute, where we can see not many treasury companies around the world, to be honest, are buying Bitcoin, barely any in the UK buying Bitcoin. Can't remember the last one outside of us to buy.
Very few. Year. If you look at the top 10, I think it was at about half a dozen over the last month or so.
Yeah, which is kind of crazy considering the price, right?
But
they've got to have the power.
They don't have the cash is the point, and that's what they haven't got access to, that cash, and they don't have that cash, and they can't raise that because the MNAVs are down at ones or negatives, so they can't run ATMs, and they're not able to get any additional funding from external sources to buy. So
do you think having control of your Bitcoin, because like a loan facility should be accessible to most of the treasury companies, it's just interesting that if they haven't got control of the Bitcoin or set up, or I would suggest that more of them should be doing that in terms of at this price point.
Most of them use custodians, don't they?
Yeah,
I wonder if that's proving problematic and makes them less nimble.
Got to move and go to somewhere that can offer the product, but they can come to CoinCorner. and do that, which is an advantage.
Cross-selling there.
Yes.
Nice
Not
plug,
selling
Danny.
CoinCorner. Just letting them know there's an option, as there are other options as well.
But I would say I would have expected a raft of buys, especially at 65. Most of them are averaging into the hundreds.
They don't have the cash.
Yeah, no,
Very
but
few of them kept any cash back, didn't they? I mean, do you remember we took criticism at the beginning for being prudent with our cash runway?
Yeah.
Admittedly, I thought the bear market would probably start in 2026. I was 2 or 3 months too late to that, but we did that for very specific reasons at the time. And unfortunately, during the frothy period that you mentioned, I think a lot of companies just deployed all of their spare capital at those relatively higher prices.
Yeah, I suppose there's always pressure to buy when you've got the capital to buy it. Like the other arguments like from the shareholders would be, why are you not buying Bitcoin if you've got the capital? Like no one knows what the price is going to do, is it? So it always looks like inactivity.
To go back and look at our stats and our numbers, and when we first IPO'd, it was like $115,000, was it? And then we bought on the way down as opposed to on the way up, and we then averaged our buy at a lower price point. But at the time, it's like, why you've got 5 million sat there, why are you not buying?
Yeah.
And it was kind of like we were sensible in some respects. It worked out slightly. Now wish we held 5 million more now.
Yeah.
But hindsight,
Exactly.
it's always a wonderful thing. Sorry, what was the actual question here? We've gone off a complete tangent.
The actual question was, did you have any specific milestones?
Oh, milestones.
Yeah.
So we don't have a specific Bitcoin target, right? It's just as much as possible.
As much as possible, as quick as possible.
Yeah.
But
Can you say the train doesn't stop? It's that sort of thing.
Choo-choo.
It's just, there isn't a target. It's like endless.
Yeah, we're consistently acquiring more every week, every day on the Lightning side, every other week, and purchase side. It would be silly right now to try and give targets based off the current environment, because this environment, nobody knows where the macro, the whole economy really is going in the direction of things.
You've got to be reactive and consistent.
You do.
I'd say consistency is the target, really. And the fact that we've got the Bitcoin-backed loan program in place and functional, we know that when the time's right, we're able to deploy capital, continually acquire more Bitcoin. And we're also putting, as we mentioned previously, those other capital management tools in place to allow us to have that flexibility to actively manage our share cap stack, which is another piece of the puzzle. And then we've also, we haven't mentioned our convertible loans. So we have that precedent, that program in place. We've did a proof of concept with Adam, with CoinCorner previously. And that's another opportunity and another way that we can continue to acquire more Bitcoin. So I think, I'd say consistency is probably our target rather than the actual number.
Yeah, and I suppose we can get further confidence from our growing yield numbers. So we talk about debt does have to be, financed. So, and when we've got growing yield, it gives us confidence that will continue to be able to be financed.
Yeah,
correct.
Great. Thank you,
hopefully that
guys.
answers enough.
Hopefully. Next question. I'm keen to explore the leveraging aspect to buy more Bitcoin. It's far more sensible at 48k per Bitcoin than 80. I think
we've probably
kind
just
of
covered that,
haven't we?
It's kind of what we've just
Is there anything else to add to that
gone
or
through. No, probably not at the minute. I think there's some other ones that we can talk around anyway.
Okay. This is quite a long one, but it talks about stablecoins and Lightning. Actually, it's not really a question, it's more of a statement, but if you guys want to weigh in on it. So stablecoins and Lightning seems to me a massive deal and one many Bitcoiners are missing, and heard some of them even refer to them as shitcoins. Bitcoin for long-term savings and stablecoin for instant cross-border payments, as well as higher interest and easy access deposit accounts than your bank account.
Whose message that? It's our absolute bread and butter.
It was in the Telegram chat.
All right.
But yeah, it's got a question mark on the end, so
Were we
there's a question in there
disappointed
somewhere.
that Tether didn't announce on Lugano that we might be coming on?
We were disappointed.
Yeah.
I
Paolo.
need to touch base and figure out what's going on there. But yeah,
We thought it would happen, right?
Not to put you on the spot
too much.
here, Dave.
We thought it would happen.
I think it was a perfect
Maybe
kind
it's just
of
hope.
conference to announce they were going to start minting.
Yeah.
They didn't, so obviously it's just taking slightly longer than maybe they expected as well.
Because our expectation is USDT on Lightning pretty promptly, right? And like, if you consider where USDT currently sits in Tron and ERC20, Lightning is a much better proposition. So yes, to that statement, would be great to see USDT on Lightning.
And Paolo himself has said that's a priority. Why would you build on any other network? There isn't anything as robust.
Exactly. So B HODL, you think positioning itself in terms of loan liquidity would be a great place to when USDT does come on Lightning. I think.
Excellent. Thank you.
Great statement, though.
Great statement, yeah. Okay, so what is your opinion on the MicroStrategy case if they might need to sell their Bitcoin? Quite a vague question, but
Do you think
any
they will?
opinions?
Do you think they'll be are they at risk of having to sell their Bitcoin?
I'm not aware of it. But
The earnings report came out yesterday.
I wasn't able to listen to the earnings call, but you remember last time we had a significant price drop, there was a lot of kerfuffle around MicroStrategy being liquidated. And I think that demonstrates that capital finance is actually extraordinarily complex. Not many people understand how it functions. MicroStrategy will hold their Bitcoin in a number of different ways. Some of it they'll hold absolutely unencumbered, in other words. Some of it they may have used for loan collateral, in many cases over-collateralized. From memory, the Silvergate loan that you talked about, I think that was 4 times collateralized.
Yeah.
So that's extremely significant over collateralization. So firstly, I don't think Saylor wants to sell any Bitcoin at all. Secondly, a lot of his Bitcoin will actually be completely unencumbered and they'll hold it absolutely. And thirdly, provided they can go on funding the cash payouts under their preferreds through ongoing sales of their ordinary shares, then they don't really need to tap into any other sources of cash flow. So I'd be surprised if they did, and if they did, it would be a sign of something fairly catastrophic. Remember that we went through the whole of the last bear market after Celsius, Lunar, FTX, and so on, without them selling a single Satoshi. So I don't see any particular reason why this time would be different.
No. Sorry, I missed that question, to be quite honest. I was busy looking at messages. I was trying to figure out the Lightning on, Tether on Lightning. It was October 2023. I had a message from somebody.
Oh, sorry, you
saying,
go back to the old question.
Yeah, it was. I was just looking at my phone. I was really looking at my phone.
No, it's just completely derailing it.
It was their top priority back in October 23. So I'm like, right, come on, guys, this has dragged.
They need to employ more people. I mean, their entire company could sort of outnumber us in this room, right?
I think they've got a few more now, haven't they?
They've got, I think they're about 150 now, I think. Okay. Yeah, they are starting to grow now, but they have been very, very small for a long time. But there's all the subsidiaries around them as well that are doing different things. But yeah, that was from October 23, Tether on Lightning was a top priority for them. So we know it is happening in the background. It's
I'm sure they're just kind of busy, checking all the boxes, making sure, because, the levels of volume that they mint on far outweighs the current Lightning network total capacity. So they need to be confident that they can mint at those kind of levels.
They're comfortable, all the edge nodes and things like that, where it's going to get a bit...
For it to be successful, rather than mint early and there's issues and it's not as successful. So I'm sure it's just that.
Yeah. So apologies there. I was... My fault of jumping back there.
Do you want to bring it back to the question that was
Michael
that we were answering?
Yeah.
The question was, what's your opinion on MicroStrategy in case they need to sell any Bitcoin?
They don't need to sell.
Yeah, I think like Freddie says, you always get this kind of fuddy stuff when the price drops.
They
I presume it's quite close to their average now, is it? Probably below.
I think it's below their average, but they have like about 8 billion in debt, do they? They have like 8 billion in debt, and then they've got, 40 billion in Bitcoin or something, and most of that debt's not serviceable for the next 7 years or something.
One problem they never seem to have is the inability to raise, is it?
Yeah.
So they'll always be, I don't see it being a problem. There might be other treasury companies that might be finding it difficult in this sort of market to actually raise. They're
in a different ballpark at the minute, MicroStrategy, compared to everybody else. They have the history as well, but also they have the size. So yeah, these price drops, it could go down to 20,000 and I don't think it makes a difference to it's a short-term price movement. It doesn't affect their long-term plan. And they have, 2.25 billion set aside in dollars for the repayment of STRC and the other instruments.
I think the last...
Which is the next 2 years, is it, I think, covered in interest payments? So basically their overheads for the next 2 years at a minimum are pretty much covered. Even if they didn't raise any more or Bitcoin price didn't go up, it's like they have no reason or need to sell Bitcoin at all.
Okie dokie.
I don't think we'll ever see them sell Bitcoin.
Ever.
No,
Wow.
I don't think we will.
Bold statement.
That is, but I don't think we will.
Okay. Next question.
Actually, I should take that back because they sold for a tax loss
I was just
harvest. They sold for a tax loss harvest, a small amount.
Yeah, a few years
couple
ago.
of years ago.
Financial engineering
So,
is okay.
That's okay. Yeah, that I can appreciate. Selling because they need to. No.
Okay, the next two questions are not B HODL specific, but kind of related. So what do you think needs to happen for Bitcoin to become more adopted and used like we do with the internet, mobile phones, etc.? When will things speed up?
Say the first part of that again. Sorry, what's the actual question?
What do you think needs to happen for Bitcoin to become
More
widely
mainstream.
adopted? Yeah.
People need to stop reading The Guardian and the BBC for a start. Did you?
They were very quick. The BBC yesterday put an article out saying Bitcoin prices dropped.
Yes.
Very rarely mention it going up.
No.
Have you seen Eric Yates' data that he's been publishing recently on media trends? So I know that's a flippant point, but I think there's a lot to be said for it there. He examined the negative and positive mentions in different media. The British media is some of the most negative in the entire world, interestingly enough. And the Daily Mail is the most negative of all.
Do you think there'll be a correlation
What a
between the
surprise.
size of the financial service industry and the negative articles?
Possibly. That would have
Because the UK does have one of the biggest financial services.
Yeah, and there was actually a
in the world.
correlation with negative in the US as well prior to the change of administration.
So you'd just see where who's
Oh,
writing
was
the pen.
this yesterday's?
I think
I think Daniel Batten
answer-
did a similar article, actually. Similar thing last year. Yeah, but his was more like it's becoming more positive. There was slightly more positive ones.
the answer for me on that question is it happens over time without people realizing, like the internet. The internet is a good comparison, I think, for what happened there. So it was a case of, back in the 90s, it was maybe your geeks and some business started to move into the internet side. Early 2000s, you started to get a few more people. You would have the older generation saying, nah, they don't want to use the internet, they'll never use it. I think we spoke about this before in the past, and I said, like, my dad always used to say, he'd never use the internet, don't need a computer. Now every night he'll sit there on his laptop every single night on the internet doing things, because it's part of your life. It embeds into your life without you realizing. You turn your TV on, you've got a smart TV with internet access, with Netflix, with Sky. Even Sky has access to the internet to do things. So it's like that becomes, you are an internet user without realizing on an everyday basis, purely because everything around you requires it to be used and everything you use in your daily life. So I think that's where Bitcoin becomes mainstream, as you just use it in the background without realizing half the time. So
you can imagine a world
it'll
where
take
you're
time.
sending stablecoins in your banking app across the Lightning network and you don't even know that you're using Lightning.
Yeah. Yeah, I mean, you're sending a bank transfer from your app on your phone and then using the internet.
Yeah.
And it's like, it's that exact mentality. You'll be in the background using Bitcoin to move that, but you don't need to know how. It just happens.
Yeah, there won't be many TradFi fee exchanges without stablecoin. In the next few years, they'll have to put it on.
I think also, I assume it's a question, I think Susie put it in. I think hers was more of a rant than a question on stablecoins being more CBDC and negative, which is true. And they are very controlled. And like you're saying there, in the next couple of years, okay, stablecoins might become popular, but they are that bridge at the minute to making payments on cryptocurrencies, but hopefully onto Bitcoin more so going forwards. But the eventual goal in my head is always, yes, it's Bitcoin. Because Bitcoin is the piece that is uncensorable and isn't controlled by a central entity. But in the short, medium term, stablecoin adoption will without doubt grow. And eventually, hopefully that then moves eventually to Bitcoin as it becomes more of a medium of exchange.
Exactly. I see the stablecoins as like a gateway, a familiarization process.
Yeah.
And think about music and file sharing. That kind of went in the opposite direction. So some of us here may be old enough to, well, we can neither confirm nor deny whether we were familiar with things like Napster, Kazaa, LimeWire, Share and BitTorrent.
Yeah.
But almost all of us, I suspect, are now probably users of Spotify, Netflix, or other apps on your smart TV. People may have cut their teeth on one thing and then you slowly move to another. And I think Danny's example of the internet is a good one. we suspect the same thing will happen with payments. An interesting point as well is, have you been checking out Maltbook?
Yes.
That's blown my mind. The idea that you have AI agents that obviously can't KYC and need...
It was faked.
I believe
I believe it was faked, yeah.
But the underlying principle is correct.
Yeah.
That obviously AI agents can't get bank accounts because they can't KYC.
Yeah.
And if they are transacting with each other, then Lightning is an obvious tool for them to use.
Yeah, definitely. I think there's been quite a lot of that. The AI agents making Lightning payments. There was it was in the news, was it earlier last year on the first AI agent to use a Lightning payment, I think. And then obviously, this network now is theoretically playing that out and having their own little ecosystem. I'd love to know how, the actual detail of how much of that was legit versus how much was it just faked.
Someone's published the prompts, haven't they?
Party, right?
Well, I think, there's the common meme as well. Things get built in the bear market, right? So many people working on so many things. Lightning Labs brought out their L402 4 years ago, which was for AI agents to integrate Lightning. And now it's starting to be used now because of obviously the AI craze. So people are building all this stuff in the background, and it's fascinating.
It's always built years before you realise.
Yeah, even Lightning itself, right? We're getting to a point now.
Paper came out in 2015, I think, was it?
Yeah.
We're now 11 years later since the paper was first brought out.
So many people are building all this stuff, and it's exciting, but it just takes years to build it, right? And to get that adoption, I think.
Cool. This last question is not really about B HODL, but about CoinCorner, so still relevant. But can you comment on whether CoinCorner customers are net buyers or sellers right now?
Yes. We got the stats before, didn't we, Zakk? Was it roughly 80% is this week? So normally it was probably 80 to 90% are buyers. So if we talk volume, and typically volume and number of customers is typically about 80% buyers. This week has been about 80% sellers on both front. On volume front, 80% sellers. On individual front, it was less, wasn't it?
Yeah. It was like the opposite.
Yeah. We've still got more buyers. We've still got more individuals buying, but the volume came from the sellers.
You're saying we've got weak hands.
Well, this kind of week is that. Well, it's probably Monday wasn't too bad, was it? I think then Tuesday, Wednesday, Thursday was heavy sellers, and that was like retail panic coming out. And there was some larger sellers as well. But then on the flip side, more people individually are buying, but they're buying smaller amounts. They're almost like DCA in that respect. So I think this week is the first week we've seen retail panic sells. I think we haven't seen that yet in the last. We didn't even really see that in October too much, did we? In the 10th of October, was it, the little crash?
What do you think the psychology is there? I'm always fascinated when people sell at what appears to be after months and months of a downtrend.
I think it's that fast movement. Like Molly said at the start, it was at $10,000 down day yesterday, on the top of what had already been big down days previously. The last Friday with the silver and gold drops, and then obviously the weekend, that's given them a few days to think about it. The prices continued down, and I think they've got to a point where, they don't know where this bottom is, so they're just selling a portion of what they need. A lot of them are not selling the full amounts. They usually sell like a portion of what they need, maybe. It's if, like you say, this is a bear, I think we've probably been in the bear market for the last 12, 18 months now, from a retail perspective, not necessarily price. If they believe this is going to continue for another 6 to 12 months, are they just selling enough to sustain themselves for that time period, which we do see a lot of them do?
I don't know if you have the answer or know the answer, but are the people that we're seeing selling newer customers or older customers? Is it a mindset first bear market panic?
I haven't looked at that.
Because that would be interesting to know.
It'd be really interesting, yeah. We'll get that answer for next time.
Cool.
I think typically, historically, I'm going to say something now and then I'll get proven completely wrong by our stats next pod. I think historically it would be the volume comes from the longer term holders, where, as I say, they're selling, taking a little bit off the table in preparation for a bear market. We do have quite a few that will come in and come out and panic, but it's not that many, I don't think. I think generally once people buy, they're buying and holding for the longer term, and then not panic selling as much. The panic sells come in like the weeks like this, where it is something typical like that, but you don't get like 80% of the people that have just signed up in this last 12 months panic selling all of a sudden like that, because they just think, oh, they're down, and they'll hold on. They're only held for a year. I think it's becoming more of a mentality if you're holding Bitcoin for a longer period of time than a year. So we don't really get traders or flippers, not necessarily trading, but flipping in and out quickly.
I think the behavior might change now as well. Now our users have access themselves to the loan instrument. A lot of these previous panic sellers might choose to actually take a loan instead.
We have seen a little bit of that.
We have seen that, yeah.
A little bit of that yesterday.
So you free up your capital, but still hold your Bitcoin.
Yeah.
And doing it in sensible, like people, you see people saying about margin calls and things like that, and liquidation points and things. We haven't had, our loan book is small at the minute. We've only just started that, but we haven't had a single one liquidated as far as I'm aware. And with the price, I mean, when did we launch it to the UK? It was about $90,000, was it ish? Maybe a little bit more. And we're down, what's that? Is it not 20%, is it, at the minute from the 90,000? A little bit more.
Yeah, thereabouts.
So, if they came in at a 50% LTV, the worst case scenarios of people at the minute might be hovering around 70%, and it wouldn't be a liquidation point till 80%. So you've got, because of that, and that's if they've not repaid it over time as well, because ours are often capital repayments and they're paying that over the months. Plus they can obviously have more collateral in there as well, like you touched on before, with MicroStrategy having 4 times the collateral that they were taking the loan on. So I think people are being more sensible with them this time, from what I've seen from our loan book. Can't talk on behalf of Ledden and the other guys. But yeah, it's not as bad as I don't think people are making out. It's just an unfortunate price movement.
Have you seen anyone sort of round tripping their cash, so taking out the Bitcoin backed loan and then using it to buy more Bitcoin on CoinCorner?
We haven't really had that, have we? We've had 1 or 2 maybe, but not.
We've probably had a couple.
We don't really have that. Weirdly, it's.
But now the price is down, maybe we might see that more.
Yeah, we're seeing more just take it out and actually withdraw it to the bank and do whatever they're doing. So I think we're seeing people using it for and the average size is about 9,000, is it? Which is about car average loan value.
Yeah, which is on par to the UK average loan value.
Yeah, which is quite, well, I don't want to say surprising, because it should be the same in that sense. But yeah, the price movement, I think there's been a massive collection of all sorts, because I know that was one of the first questions. ETF outflows, silver and gold last week, I think, triggered that on their drops. There's ETF outflows was big in the last sort of week now, into the 1.5 billion, I think, $1.5 billion. I was just firing that across in messages.
How much
last
do you
night.
think Trump's appointment of the new head of the Fed was affected? Because that's the thing that got reported most, I would say.
Don't think that's affected the Bitcoin. I think that's affected the gold and the silver side.
Do you not think it just affects everything?
Which has had the impact. So the gold and silver, there's also rumours now that, and I don't know, again, rumours, so this is not my thesis of what that is, but there's a hedge fund that's blown up in Asia because of the silver side, because of silver trade. And they were heavy on the Bitcoin ETF side of IBIT, of BlackRock, which meant then they've come out of that, but then effectively they've not been able to save themselves because silver continued to go down. So they're expecting, I think it was May, by the time they actually report their filings for bankruptcy.
So you're saying a hedge fund was overexposed to the silver price, that crashed, causing them to have to liquidate their Bitcoin position?
To have the margin call covered on the silver side, which has then forced...
That is an unexpected little journey for Bitcoin right there.
Well, we knew the gold and silver drop from last week was going to affect Bitcoin. It was clearly going to have an impact in some capacity.
It's affected China in the past as well. Yeah. They, when most other countries went onto the gold standard, China chose to go on the silver standard, didn't they? And they keep on doing this. They burnt their fleet in the 1400s. I mean, they could have colonized the New World. Why? I mean...
I do think the silver and gold, for us to think that the Bitcoin price wasn't going to move after a 45% drop on silver, was it? Which is the biggest ever.
And it was 21 in a day.
Yeah, it was crazy.
Mad.
And how much on gold was it? Was it 15% in a day as well on gold on that Friday? Which again is the biggest or second biggest ever. It's you can't expect the other assets around the world to not have an impact on the back of that. And I think unfortunately, Bitcoin is that front running asset that always sniffs out the problems.
It was 24/7, one of the most liquid markets.
And I think that on top of then eventually this week, as I said there, we've at CoinCorner side, we've now started to see CoinCorner retail have a little bit of a panic this week and sell this week, which we've not seen so far. So it's kind of like that constant dropping down over the last couple of months, and then this sudden quick price movement, I think, has triggered that. I assume that normally when we see that, the rest of the exchanges around the world all see similar behavior, similar patterns. It's human behavior is what happens, which is probably what's caused the price to go down and continue to go down the way it was. I think all the longs of pretty much leverage side of things are all starting to be squeezed out now, or the majority. And the shorts have built up to a ridiculously big position at the minute in comparison to the long side. So that'll be an interesting
when do we back
flip
up the
in the
truck?
Direction. Pardon? Back with the truck. I cannot give advice. Look out for the RNS today. So yeah, I think there's just so many things at play for the price and where it is. Again, the fear and greed index down at 9, I think, at the minute, which is below or the same pretty much as the Celsius crash in 22, the COVID crash in 20, and the altcoin crash in 2018, which has happened typically every 2 years of chaos. FTX crash didn't even go as low as this at the minute.
It's what I find so weird about this scenario. Each of those ones you mentioned, there was a reasonably obvious market justification for it. This seems so peculiar.
It has to be the silver and gold in my head. Yeah, has to be the silver and gold knock-on effect. And as Dave says, like there's the US Fed potential change. There's obviously silver and gold. Trump's playing all sorts of games in all different parts of the world. There is just a lot of combination of things, and I think it's just that snowball effect over time. There's no one thing like you can point to. It's just a combination of all sorts. The big one main thing will be silver and gold, but that's had an impact from other things that have made it do what it's done. I think everybody's looking for this crazy, maybe that like the crazy Asian hedge fund that's apparently gone pop, and that's again another one I've looked at there in some sense, and people are looking for that reason as to why that's gone down, but often it's just unknown, uncertainty.
What's Suzu doing at the moment?
And yeah, God knows. So yeah, maybe it's just the boring. There's just been a panic in the market, and people have come out.
Like I know we talked about it on the other podcast, and it was the end of the 4-year cycle. But do you think as well people have been waiting for like the signs of a bear market, and then it's like, shit, this is it, go go go.
I do think there's the mental sort of side of things of people expecting this 4-year cycle, and now is the time when it was about October to November should have been the peak, which technically we saw, and then they're coming out now thinking, okay, we're now in bear market territory. But I do think the 4-year cycle is kind of broken, and it's the dynamics have changed completely because of the institutional side, and we've seen that from the retail audience has been in a bear market for 18 months, but people have not realised because the price is held up because of institutions. So it's a different dynamic, and yeah, it's just a combination of many things.
Okie dokie. Right, we're going to run through the general agenda then quickly. So this is topics as well from the last month. So the few things that are nothing from the beginning of January or anything. So the first one we have is Bitcoin holders saw their first 30-day stretch of Bitcoin realized losses since late 2023.
I think we've kind of covered this, haven't we, with the price
there'll be a few
movements?
things on here actually that we've covered. Gold nearly added Bitcoin's entire market cap in a single day. Got anything else to add about gold there?
Well, this is an illustration of the fact that Bitcoin is still very poorly understood, and there's a lot of potential upside in the market. I like to refer to the numbers of people that we know who hold it, and the FCA numbers show that about 12% of people in the UK hold crypto, and most of that is in Bitcoin. 12% sounds good. That's about 6 or 7 million people, but it's still a relatively small portion of the potential holders of Bitcoin over time. And one of the key theses of treasury companies, talking about B HODL for a second, is that you acquire this valuable asset and then you issue instruments, effectively liabilities, in order to acquire more of it. companies used to do this with gold back in the day. They became central banks over time. One of the key differentiating factors, though, is that no one had to convince the general market back when those companies were doing it that gold was valuable, and that's something that we're still in the process of doing. And we wouldn't see daft articles continually being written by the Guardian and the BBC if we were in a world where the value of Bitcoin was obvious to everyone, as the value of gold kind of culturally is.
Good answer. We got GameStop. They moved their entire Bitcoin stash to Coinbase Prime.
I missed that.
I thought this was just a bit more of a light-hearted one to throw in there. I think
this was a couple of weeks ago now.
I tagged that, yeah, it was. But yeah, GameStop looked like they exited their position. We don't know if they did still, because I assume we'll have to wait till next earnings reports. But it looks like they sent their Bitcoin in. Whether they've just moved it for custody purpose, I don't know. But yeah, if they've sold, that's an interesting direction change for them.
They totally fumbled that, didn't they? They came out to speak at the Bitcoin conference, didn't buy then, bought high, sold low. Fantastic work.
Yeah, like I don't think that necessarily means sell, does it?
It doesn't, but typically the behaviour is that's what they're doing. They're sending it in for a reason, and that is often the thing. It could be they're sending it in for custody purposes as opposed to selling, but we'll know it the next quarter, I guess.
Or tax loss harvesting.
Yeah.
Potentially, but I think they sent everything. I think they sent all of what they had, was it?
It says the entire stash, yeah.
Yeah.
The earnings will tell us, right?
They will.
Okay, so the average Bitcoin ETF buy is underwater as investors have pulled 2.8 billion out in 2 weeks.
Kind of touched on that briefly before, yeah. The crazy positive thing for that, if you actually look at the percentage. So, Mikey, do you mind just getting up how much is held in the Bitcoin ETFs at the minute? Just search for Farside Bitcoin ETF. And the amount that's actually in there at the minute and the amount that's come out as is a tiny percentage of what's held in there. If you scroll down slightly, you can see the totals there. I can't see from here properly, but it's $54 billion, is it? Yeah. $54 billion in there at the minute. And there's been, does it have a total there of what's come out all time? Is that the 25? I'm not sure. But the percentage of that inflow versus outflow, you can still see there's still over $50 billion in Bitcoin held in these ETFs. It's still an incredible size. It's probably hard to say what it was at its peak because obviously the price has come down. So it would have to be the inflow outflow net, which might be that 25. But it is a small percentage, I believe, of... no, it's not that one. That's,
so your point is they're still holding a lot, right?
Yeah, they're still holding. Yesterday's IBIT one, so the BlackRock one, was over $10 billion volume, I think. And they had an outflow of, was it 175 mil there? But with 10 billion volume, there's some trading going on there, and there's some buyers kicking in there. Even though it was a negative day as a total, it was a surprisingly low negative day in comparison to what I would have expected, given the record volume day. So yeah, there's been a lot of outflow these last 2 weeks, but it's weirdly held up, I think. And I do think yesterday's, normally you'll see the outflows. There's a $800 million one there from like a week and a bit ago. And you would see the Bitcoin price go down accordingly with that on that day. And it'd usually be about $2,000 or $3,000 maybe. Yesterday the price went down $10,000, but actually the outflows were only 400 million. So it wouldn't have correlated too well there, which meant then retail would be the sellers or somebody else is a seller. And that's what we saw in CoinCorner. Retail were starting to be the seller. So I think this week has been a retail seller as opposed to ETFs moving the price.
Cool.
Two and two together getting 5, but we'll see.
Okay, so the next 2 talking points then. We've got Lightning $1 million. You told me to write that on the agenda before we started, so I've got nothing to go on.
This came out yesterday, I think. So it's what they called SDM, Secure Digital Markets. Completed a $1 million Lightning transaction to Kraken using Voltage. And they're claiming it's the biggest Lightning transaction that's been done, which I'm pretty sure it might be. it just goes to show, obviously, Lightning is often thought of, and certainly when it launched for micropayments, and it still has its place there with the whole AI agents we kind of briefly touched on. But it's also a piece of technology that can be used for much, much larger payments. Now that kind of payment reliability has been kind of improved over the years. So it's good to show kind of like on an institutional level that it can handle these larger transactions, and then it's settled instantly. So under half a second, I think it took to settle $1 million.
With near zero fees.
Near zero fees.
Days where you can send $1 million instantly with near zero fees.
That's incredible. If you look at the funds flow Excel for an M&A transaction, you see how much the banks are getting paid just for moving that. Sorry, Danny, you were going to say?
No, I was just going to say, we see from CoinCorner and now obviously B HODL side with the Lightning side, a lot of the payment. We should probably get our average payment size, shouldn't we? And have a look at that. We may have to exclude the Free Sat Friday small sats, but the average for the CoinCorner customer actually is typically. There's some quite large ones now. There's some that are more like $10,000, $20,000 transactions. So the day of the microtransaction mentality for Lightning, I think, is slowly moving away a little bit.
And in terms of reliability for those bigger transactions, how many like failed payments do you typically get if you're making one of that size?
As long as the liquidity is there, it would be success pretty much 100% of the time, isn't it? It's not.
Payment reliability has massively been improved over the last few years. From the technical improvements.
Yeah, when I say liquidity, as long as the liquidity is there on our side, there'll be a route through. So you will typically just find a route through for 10, 20,000 quite easy.
And like I said, I think it just goes to show it's a network that can do micro, like sub pennies, and then $1 million plus. Whereas you look at like faster payments, GBP, that can't do over £1 million.
And it won't settle.
For days.
I did an M&A transaction in 2009 where we thought we closed. We were all gone to the pub, and then $50 million of the transaction fees had vanished. We had a send confirmation, and it was 3 days. No one knew where it was. No, we couldn't close. I tried to keep drinking for that 3 day period, but it was very difficult. It was awful. And actually, Molly, to your earlier question, what does it take for Bitcoin to become more widely adopted? Once the network demonstrates that it can settle large amounts, I mean, I'd like to see 100 times that size. If you can close a $100 million M&A transaction, settle instantaneously for almost no fees, that's a huge selling point for everyone doing M&A. And as soon as we can get, and then once you can tick the M&A box, then you move to very large scale industrial cross-border transnational settlements. That's exciting.
That's exciting.
They could technically do that on chain now quite comfortably.
Yeah. Once, who was settling oil futures in Bitcoin recently? I have a feeling it was a sanctioned country, so perhaps we don't want to dig too deep into that one.
I don't remember that one.
Okay. Last conversational point is we're talking about calf. Where do you want to begin with that?
Dave stayed quiet all episode just to get onto this bit now.
Save the best till last.
Yeah, well, I think Freddie's been campaigning the hardest for what we see as problems with the calf. So it's a crypto asset reporting framework that's been put into place whereby government tax bodies have to share information with each other, probably driven by the Americans in terms of trying to share that data. So that it's transactional data shared whereby they would automatically request your address and how many individual transactions you're sending. And so I think you've been probably at loggerheads with some of the government bodies that are trying to introduce this.
Yeah, shall I give a couple of minutes on what the problems are and where we see them? So
I think it's underlying how important it is for anyone that's involved with this sort of industry that they're aware of this is happening, I think, fundamentally, because I think it's been lost slightly.
Yeah, completely right. And this is true for everyone who uses Bitcoin in any respect, whether you buy from an exchange, you buy peer-to-peer, if you self-custody or use a custodian. So as Dave said, CARF is essentially an information sharing framework, and it imposes a requirement on all regulated exchanges to share information with their local tax authority, and then that local tax authority also then has to share information with other tax authorities worldwide. Many countries have signed up to this, more than 100 at my last count. The ostensible intention here is to ensure that everyone pays the right amount of tax. The problems with it are, I suspect, are fairly obvious, because the amount of data being shared is quite intrusive. It includes name, date of birth, home address, amount you hold, amount you sell. And you probably already worked out that if those pieces of information are leaked, which they almost certainly will be, whether through hacking or through human error or through human corruption of some kind, that creates an enormous, and as we've seen in France, very, very deadly pot of data that enables bad actors very quickly to run through a list and say, oh, this person's got 50 Bitcoin, this person's got 70 Bitcoin. We know that they withdrew it to self-custody on such and such a date. Here's where they live. Let's go round to their house with a hammer and an electric drill. And that's not an exaggeration. This has happened multiple times in France. As Dave says, we've been pushing very hard in Parliament and in the all-party parliamentary group to flag these real risks of physical harm to the people who are putting these rules in place. And Dave, I think you've got more detail on this than I have. The tax authorities seem completely oblivious to this kind of risk. I've also been working with a researcher on the continent who's compiled a peer-reviewed academic paper with more than 300 detailed cases of attacks. I'm going to be putting that in front of various decision makers in Parliament, really to try and flag that this is a real problem, and then also suggest some mitigating factors. Simple mitigating factor: don't share home addresses.
Yeah.
It's just
You don't need the home address.
You don't need the home address.
Which is crazy.
Especially if you've got the TIN number.
You got the tax reference.
Yeah, you got the tax reference.
Why do you need a home address?
Why do you need the home address? Other mitigating factors you could suggest: you might be able to have a de minimis. At the moment, every single person's holdings are disclosed, and this exposes everyone. Even if you've got 0.01 Bitcoin, if someone thinks you're an easy target to knock off, someone could pop out on their lunch break with a hammer.
Yeah, in the Alaman they were requesting every transaction.
Yeah, every single one. I think most.
Which I just thought was cool, because I was lucky enough to sit down and consult with the tax office on parts of this when they told me this was the framework, and they were kind of. I had to educate them in terms of how many decimal places Bitcoin transactions go to. So I was really surprised in terms of the learning curve that we were required to take those steps. It was just surprising that we weren't already there. So there's a few bits pieces in terms of the learning that's required and the security pieces that are needed to be improved, I think. But it's by no means. I think I'm hoping that these are sensible people and that we can actually put in place something that's workable. Would be my hope.
I'm hoping. I'm not particularly optimistic at this point, I'm
Right.
afraid. My pessimistic view is that, unfortunately, we're unlikely to see much change until there are actually some violent crimes committed, which is not what you want to say.
No.
Is my mic gone, Mike?
Yes.
Well, that's an
already has been
absolute blessing.
And a blessing in disguise, that.
Yeah, so it is a worry. It's in terms of the level of knowledge was surprising for me. So I had to explain to people that, individuals could do thousands of Bitcoin transactions through Lightning, like literally you could buy
fractions of pennies,
and they just weren't ready for that sort of. They just thought it was as simple as people saving in huge chunks, and that surprised them. I just don't think that particularly some tax authorities are prepared for being able to record it and of kind of pushing it through and rushing it through, which is worrying.
You think like some of the, like in Binance, for example, and you've got like all the staking style mentality, or you lock in X, Y, Z, and you get paid out like daily interest of things and stuff like that. And it's like all of them, there's literally daily tiny transactions going on constantly. Like normally at a bank, you would get maybe monthly payments and stuff, and it is simpler and it's much smaller. So yeah, I think they're not aware enough of how everything's working in the crypto sphere to really have structured this correctly.
But yeah, there seems to be a rush to push it through, and which is where things become problematic, I think. And their data collection is just, we just need it all.
I really don't think they've thought about the personal safety side as well. Because I was going to say, in the UK, there's been attacks in the UK, multiple, and in people's homes and things as well. So, and some of them are in the news, some of them not, but they've been happening for years. So it's not like you can't quickly Google it and find them. So they're, for me, them collecting the address, they haven't even thought about it at all.
And no matter their efforts, this information will get hacked.
Oh yeah, 100%. If it's got to 100 countries around the world, think about how many people work in them departments.
And which is the most vulnerable of those? So you may 99 of those may have best in class information security. What you just need one.
That doesn't. Yeah.
It won't even be ARC. It'll be the classic mistake of CCing everyone.
No, it really will. It'll be
CC everyone,
and it's just so dangerous for that data to be there.
Well, we know that an official working in the French tax authority was bribed in order to provide Excel information of significant holders, and that has led to a number of attacks. And I mean, God, the co-founder of Ledger had his finger cut off, for fuck's sake. Absolutely ridiculous.
Yeah.
One thing you could do, because you've got such a huge amount of data, you could print it all out and provide and completely, effectively do a DDoS attack on them using paper.
Well, physical DDoS attack.
In terms of, I know they're recording it through like Excel CSV, so there's maximum number of transactions in terms of how they'll be able to cope with it. I don't think they'll be able to cope with the amount of data. So I think that's probably something they'll have trouble with anyway.
I don't know how actual useful it will be to them, I think is a part of that. And maybe it'll be useful where they'll take just the big guys and they'll look and focus on some of the bigger transactions and the bigger volumes.
That's what we've suggested.
And they'll exclude the small and just leave them because there's too much data
reason
to go
must prevail, right? But also it harks back to 12% of Bitcoiners in the UK and XYZ. It becomes like if the government is collecting this, then the people that are concerned are the constituencies, and they should be actually saying this is a problem. Put it on a manifesto of someone that isn't doing this or would actually rail back or put these in place, and those people then get elected. It's about Bitcoiners have to shout about this a little bit and make sure that it's heard by their local politician, and so that we can actually affect change. I think that has to be the next step.
I think the worry though is that's all well and good for the next step, but actually this is too late because CARF's come in. Data is going to be shared, addresses going to be stored.
I'm worried that it will actually take some horrific incident for the actual change to be made.
Even then, everybody at the minute that's ever had Bitcoin purchased or crypto purchased on Coinbase, Binance, etc., that's all now. That data with their address is going to be with the regulator.
Not so bad. So only from January this year. So if you've closed all of your accounts and moved all of your stuff off beforehand, you're limiting the impact on yourself as an individual.
Okay. I guess the question would be then how many people have done that?
I suspect only the most security conscious.
Yeah.
Well, people won't be aware of it.
And you'd never be able to buy Bitcoin again.
Yeah, exactly.
And
like 9 out of 10 Bitcoiners won't be aware this is happening.
No, yeah, that's it.
I think you're right though, Dave. We do need to get more political, and it's very often you feel as though you're shouting in an empty room. There are 7 million voters who are going to be affected by this in the United Kingdom. That's easily enough to swing elections, particularly in marginal seats. And whether you're a Reform voter or not, they're the only party at the moment who seems to be taking these issues seriously. And if other parties are jealous of where Reform are in the polls, this is low-hanging fruit for them to get involved. I think that one thing that a lot of politicians don't seem to realise is that most people don't care about Bitcoin and cryptocurrency at all. So you're not going to lose their votes by supporting it. But the people who do care about it care a hell of a lot. And we need to be more motivated and more vocal.
I do think it's unfortunate because now it's in, them addresses are in there.
Yeah.
And even if change comes in the future and they'd start to say, okay, we're going to take the addresses out, are you going to trust them governments all around the world to delete that data?
No.
And remove it? And you're not. And that's unfortunately that has now, the horse is bolted, it's done. It's going to be a crisis control as opposed to a change at the minute.
But most legislation like this, then it doesn't. They tend not to repeal; they tend to build on. So, like your CARF at the moment is your 10-year address. Where does it stop in terms of your children? Like
for the future ones.
So you would have to mitigate. You would hopefully stop that progression.
You want the address removed for future people as well, so the future people don't get hit with the address. But right now, for this, like Freddie's saying, 7 million people in the UK as an example, their address is out there at that point. And there's nothing you can do about that really. It's there forever, even if they have to delete it at some point in the future. Realistically, they're not all going to delete it, and there's going to be some data somewhere. So painful.
Cool. Should we end on that depressing note?
Yeah. we could go back to GameStop selling just to lighten the mood a bit.
No, we'll end it there. Cool.
Okay.
Thank you guys.
Thank you.
Thank you guys.
Cheers.